In 2020, otherwise known as the pandemic year, investments became increasingly tricky as businesses struggled to stay afloat. This also created a decline in the real estate sector. Now, in 2021, these real estate investment trusts are making a comeback with steadily improving figures. In this video, we aim to show you the top 5 high value REITs you as an income investor should be watching. Stay tuned till the end of the video to find out all the details. REIT represents Real Estate Investment Trust. It refers to companies that serve as income vehicles for real estate. They own, manage, operate, lease, or finance income generating investment grade real estate, usually specializing in a specific real estate sector. REITs are publicly traded like stocks on major security exchanges throughout the trading session, resulting in high liquidity. They mostly invest in real estate property types, such as apartment buildings, warehouses, infrastructure, hotels, medical or healthcare facilities, and so on. This gives room for both small and large investors to gain access to real estate investment. While they do not offer much as regards capital appreciation, REITs produce a regular stream of income for these investors. The times look favorable to investments, and this is thanks to several factors, such as an improving U.S. economy, continued low interest rates, and the return of inflation. With the notable trend of improvement from the decline in 2020 combined with the undervalued stock prices at present, it is certainly an opportune time for income investors seeking out value REITs. However, as nice as this may sound, it sometimes may pose a Herculean task to find growth and value in real estate stocks. Challenging as it may appear, though it isn't impossible. Here are our top 5 high value real estate investment trusts for you to take into consideration. Number 1. STOR Capital. STOR Capital, STOR for short, is a real estate investment trust that focuses its business on the acquisition and management of single tenant properties in the United States. It leases its facilities to companies for business operations and to middle market and large businesses, which it generates sales through long term agreements. The REIT owns 2,656 properties and has 522 tenants across 49 U.S. states. STOR's property portfolio boasts an occupancy rate of 99.6%. STOR acquires approximately 25% of its revenue from its service sector customers, such as health clubs, restaurants, furniture stores, and movie theaters, all of which suffered in the year 2020 due to the pandemic. A fairly large percentage of its total real estate portfolio entails the restaurant and industrial locations. Specifically, properties in Texas, Illinois, and Georgia make up a large amount of STOR's investments as well. The STOR Capital stock price is presently at $36.19. Market cap or capitalization is $9.79 billion and a dividend yield of 3.98%. Number 2. Physicians Realty Trust, or DOC. Physicians Realty Trust is an autonomous healthcare real estate company whose target is to acquire, selectively develop, own, and manage healthcare properties that are leased to physicians, hospitals, and healthcare delivery systems. DOC invests in medical office properties leased to national and large regional health systems. The REIT specializes in outpatient facilities outside from hospital campuses and owns 274 properties. It leases its property to medical specialists like oncologists and surgery centers that are exempt from telehealth risk. Post COVID, we've seen trends signifying preference for non hospital settings over hospitals, which is of advantage of the outpatient facilities which Physicians Realty Trust focuses on. The price of the stock is $18.95. Market cap is presently at about $4.08 billion and the dividend yield 4.85%. Number 3. WB Carey, or WPC. Valued at approximately $18 billion and ranking among the largest net lease REITs, WP Carey is an enterprise with a highly diversified portfolio. It invests in net release commercial properties and specializes in sale leasebacks, built to suits, and the acquisition of existing net leases. It operates through 2 segments: real estate ownership and investment management. In the US and Europe, WPC owns 1,261 properties, representing 146 million square feet of leasable space, mainly consisting of industrial warehouse and self storage, but also single tenant retail and office properties. The company has 351 tenants, with the top 10 representing approximately 21% of the portfolio. Up to 98.3% of its facilities are occupied, and contractor rents increases are built into 99% of leases, including 61% linked to the Consumer Price Index. Its current stock price is $80.69. Market cap is $14.92 billion, and dividend yield stands at 5.21%. Number 4, Iron Mountain, or IRM. Iron Mountain is an American enterprise information management services company. It serves around 225,000 customers worldwide and has no major competitors in the physical storage business. They provide solutions for document management, records management, secure shredding, data backup and recovery, and data centers. Iron Mountain expanded into digital record space approximately 3 years ago and quickly grew that business to 10% of total storage revenue. With its 98% customer retention rate, the average customer has stored records with Iron Mountain for 15 years. At present, they are running construction projects expected to increase the REIT's digital storage capacities by nearly 40%, and Iron Mountain could potentially triple their storage capacity for its existing data center portfolio. With the stock price at $43.96, market cap of $12.63 billion, and dividend yield at 5.65%, this is an REIT worth investing into. Number 5. Omega Healthcare Investors, or OHI. Recognized as a triple net equity REIT, Omega is the largest REIT that invests in and supports the goals of long-term healthcare industry, primarily in skilled nursing facility (SNF) and assisted living facility (ALF), and with financing and capital. It owns 954 properties across the US and the UK, representing nearly 97,000 patient beds and a portfolio net asset value of $10.2 billion. It has $1.45 billion unsecured credit facility and proven access to the largest public equity and debt markets in the world. The 11% fall in nursing home occupancy from January 2020 to January 2021 hit hard. Thankfully, OHI is on the road to recovery, with occupancy rate improving 3% in the first 5 months of this year. In addition, Omega was able to collect 99% of rent during the last quarter. OHI's stock price sits at $36.62. It has its market cap presently set at $8.53 billion, and its dividend yield is 7.39%. Which of these REITs do you or would you like to invest in? Feel free to tell us in the comments section below. We are sure you enjoyed this video, so please go right ahead and give us a big thumbs up. If you haven't already, don't forget to subscribe to our channel and turn your post notifications on by hitting the bell right next to the subscribe button so you get to know every time we upload something new. See you in our next video.